Hello, it's Big Cheds, and this is the Trading Encyclopedia daily education series on my YouTube at Cheds Trading. You can find me on Twitter at Big Cheds and Bitcoin Live, where I am a founding analyst. For today's lesson, we're going to talk about a triple bottom. We've talked about triple bottom, triple top in other videos. This is a specific video on the triple bottom, but it's a bullish reversal pattern. Here's, of course, an AI overview. Pause and read this on your own time. Differences between double and triple bottom, all that good stuff. But let's show you a couple images. Here's a triple bottom. You have a move down. So first of all, to reverse any trend, you need to have a trend in force. So a triple bottom in a sideways environment, if the price had advanced sideways into this structure, there would be nothing there. There would be no pattern to reverse. But if there is a mature downtrend first, you set an initial low, then you have a peak, another low, and then another peak, and then another low. Now, this becomes a triple bottom when it begins to break out. Until then, it's really just a failed double bottom, right? Because just testing a low doesn't really establish a triple bottom. The triple bottom is only a triple bottom after it breaks out of the peak. Same thing with the double bottom. And we've talked about this concept many times in the past. So what you want to see is three touches with something called time interval in between the touches. So you have the first low, and then you have time interval between that and the second low, time interval between that and the third low. You also want to have, here's another example, you want to have something called price distance in between the trough and the peak. So here's our low, and there's a pretty good price distance to this high before it comes back and makes that second low. Again, pretty good price distance. And I'll show you what I mean by that. So for example, you have a move down, come up here, move down, boom, boom, boom. This is really just a attempted double bottom, right? Not a triple bottom, because there's really not enough price distance in between the trough and the low here. You would need a move up to maybe at least here to consider this another attempt at a low. When in reality, this move here is just, like again, this move here is 1 and 2, not 1, 2, 3. It's a very important thing to keep in mind. You also have different variants, of course, of the triple bottom. Same way with the double bottom, you can have a lower low, equal low, and higher low. Triple bottom, you can have a triple bottom with even a slightly higher low. This would be your best case scenario, showing increased buyer demand, more anxious buyers. And again, you're going to wait until the price clears the peak of the structure. Again, your confirmation method could be intra-candle, could be 1 hour close, 4 hour close, whatever it may be. And your general price target is going to be the height of the pattern. You see here it's 100 to 120. That's a $20 move. You extend that out to 140. And again, you want to remember, keep an eye on obstacles, other price structure in the way. If there was a major resistance level at 130, for example, that would really be your target rather than 140. You're not going to overlook major price structure on the way to any sort of measured move. But here's the triple bottom. Okay, you can pause again and read this on your own time. And this is for the Trading Encyclopedia daily education series on my YouTube, Cheds Trading. You can find me on Twitter at Big Cheds and Bitcoin Live, where I am a founding analyst. Folks, thank you so much, and I'll talk to you soon. Big Cheds out.